Today, I'll walk you through how Intuit Enterprise Suite, IES, solves challenges for complex multi-entity businesses. For today's demo, we'll review new capabilities across three core areas: multi-entity setup and management, multi-entity operations, and lastly, consolidated reporting. Let's begin with the setup. Meet Fernando, the controller of Horizon Construction. He logs into the consolidated view of his organization, where he's greeted with a bird's eye view dashboard of all of his entities in one place. The first thing he observes is an overview of his multi-entity business with tiles to view profit and loss, income, and expense. Every business has unique needs, and as the controller, Fernando wants to ensure that his organization is set up correctly to meet his business needs. His first step is to set up the shared chart of accounts. For context, Fernando was drowning in complexity to manage his chart of accounts. Each of his companies had its own chart of accounts, leading to inconsistent reporting and a painful month-end close. Worse, with no access controls, accounts were often added or changed incorrectly, creating chaos. Fernando is now able to leverage IES to analyze his chart of accounts data and come up with a clean, standardized structure. From this one screen, Fernando can now create a new account and instantly propagate it to all of his companies, or just one, ensuring total consistency. He can choose an existing COA as a reference to aid with the cleanup. The platform identifies matches between the reference and existing COA across Fernando's organization and provides them with the opportunity to review any changes. Once approved, the platform will make the suggested changes and update Fernando when complete. Once completed, Fernando will be able to turn on the shared chart of accounts, which is a central chart of accounts across the entire organization. Here you can see that some of the accounts are shared with all of his companies versus a subset of companies. Fernando creates a new account called Bricks that is shared with all of his companies in the organization. By automating the chart of accounts setup and standardization, Fernando can improve the speed and accuracy of his financial reporting, all while reducing manual effort and eliminating errors in data consolidation. Similar to the shared chart of accounts, Fernando can also set up a shared list for dimensions across his organization as well. The last thing Fernando is going to do is set up his intercompany transaction settings. As the controller, Fernando is accountable for his company's books to be accurate and compliant. Having said that, he may not be the person who's performing operations on a daily basis. And with IES, he can now set up his intercompany transactions and eliminations, giving him full control on accounting, even if he's not the one performing daily operations. He can set up the default mapping for all of his intercompany transactions and can also set up automatic eliminations for intercompany journal entries. Fernando will have full control on how he wants to perform his eliminations. He can either have the platform eliminate automatically, or he can review and perform eliminations manually. In this example, Fernando wants to automatically eliminate for allocations, while he wants to review the intercompany journal entry eliminations and intercompany sales. Now that Fernando has completed his multi-entity setup, the next core area we'll be reviewing today is around multi-entity or intercompany operations. This is where an AP or AR clerk, lead accountant, or other personnel in the organization can perform their operations on a day-to-day basis. First, we'll be going over intercompany sales. In this case, an AR clerk logs in to one of the companies in the organization, and he or she will be able to create an invoice to the other company within that organization by selecting an intercompany customer. In this case, that's Williams Construction. As soon as the AR clerk creates an invoice, that automatically creates a bill on the target company without any user intervention. The reason for that is Fernando has already set up the automatic mappings while setting up IES. So now, when the target company's clerk can log in, review the intercompany bill, and save it, and IES will streamline the entire intercompany sales process by allowing seamless selling and buying between entities using the intercompany invoices and bills. With the November release, we will be further streamlining the intercompany allocation process by introducing dynamic allocations. Customers will have access to a new flexible tool that automatically consolidates and sums amounts for the entire account balance. The feature allows companies to select and allocate the entire account balance as opposed to each transaction, based on filtered criteria such as customer, vendor, employee, product service, class, location, or dimension. Many of our customers receive hundreds of bills over a period of time, so it's very tedious for them to perform transaction-by-transaction allocations. In this example, Keystone Construction is creating multiple invoices to Abigail Patel, and these invoices are related to multiple companies in the organization. Here, we'll select Keystone Construction as the source company, construction income for the category, and add an additional filter for Abigail Patel. The user can then select the target companies and hit Allocate, which will automatically populate the entire allocation form based on the information you provided. Users can also review this in the Consolidated Transaction Journal as seen on the screen. This capability eliminates the need to process transactions individually, enabling bulk allocations as a part of the month-end process, thereby saving significant time. Next, we'll cover intercompany eliminations for allocations. With IES, the lead accountant can now perform all his month-end activities seamlessly from one page. He navigates to the Intercompany Transactions page in the consolidated view where he sees the full list of transactions. By selecting View Elimination, he can view the eliminations completed by the platform and can make any changes as needed. If the accountant has any pre-filled eliminations that he needs to complete, he can select Create Elimination on the same Intercompany Transactions page. Here you can see that the elimination form is pre-filled, and he has the opportunity to review and save as well. The last area we'll be covering today is consolidated reporting, starting with our new Consolidated View dashboard. In this example, our CFO, Candace, logs into IES and has a new consolidated view that provides a bird's eye view on a dashboard that brings every single entity together in a single unified perspective, offering more access to insights and multi-entity capabilities for better visibility and decision-making. She'll be able to view multi-entity dashboards, and in this example is going to click in to the multi-entity profit and loss dashboard to view deeper insights across her entities. Since it's the month end, she also wants to prepare one set of consolidated financials for the entire organization to present to her board of directors. She navigates back to the home page and selects the consolidated report she wants to prepare for the consolidated report section. Profit and loss is up first, and she's able to generate the consolidated P&L with one click, pulling in all relevant companies' data and automatically posts elimination entries. All the financial reports, like consolidated P&L, first show an aggregated summary across all entities selected. From there, she can filter the report by company or a number of other attributes, allowing the ability to slice and dice data to better analyze and gain insights about business health and status. From the summary report, Candace can also click into any total or subtotal value to get a list of all transactions that make up that value. This provides her with more details on financials or helps her easily investigate any discrepancies. For example, she clicked on Materials and Supplies account total for Keystone Construction to see all the transactions that make up that amount. While reviewing, she notices that there is a mistake for one of the bills. She can click on that row, which will open up a new tab with transaction form. In this case, it's an expense, allowing the ability to directly edit transaction forms without losing context. She makes the appropriate adjustments for the bill, clicks Save, and returns back to the consolidated view to continue reviewing the report, enabling a seamless way to make changes without losing context from the reports. Finally, Candace knows the current detailed report filtered on one of her companies is something she'll be generating often, so she saves a custom view of that report with filters applied for easy access in the future. In addition to the consolidated profit and loss, there are 14 additional consolidated standard reports that can be generated and configured to get an accurate and detailed view of one's company financials. Users can find these reports in the standard reports section of IES. They can also create their own consolidated reports and pull in any dimensions relevant to their business. To summarize, Intuit Enterprise Suite provides a powerful, all-in-one solution for the challenges of multi-entity accounting. For the controller, Fernando, it offers a single place to configure the entire organization, ensuring data consistency and control. For the day-to-day accounting team, it automates tedious tasks like intercompany transactions and eliminations, saving countless hours and reducing human error. And for Candace, the CFO, it provides real-time consolidated reporting, enabling instant financial analysis and smarter data-driven decisions. By connecting these three areas, IES transforms your accounting operations from a manual, fragmented process into a strategic and efficient system.